Let's send it over to CommSec now. Tom Piotrowski for a look at the markets today. So what's the story going to be today at the ASX, Tom?
Pete, we're going to see a little bit of a knock at the start of trade, but the market's done quite well over the course of the last couple of weeks. So it's a little bit of a balancing item. On the one hand, we saw the Chinese market do quite well yesterday afternoon on the back of the reopening story, the fact that Chinese authorities are liberalising those COVID-19 restrictions was a factor pushing the Shanghai market up by 1.7%. The Hang Seng was up 4.5%. So to an extent that helped Northern Hemisphere trade, but then there were mixed fortunes in terms of the economic news. So in the US, there were actually better manufacturing numbers and better figures out of the US services sector, and that cast a little bit of doubt over the Fed's commitment when it comes to being less aggressive when it comes to hiking rates. So that's part of the reason why we've got the US markets down by around 2% when it comes to the NASDAQ and the S&P 500. European markets were worse off for a different reason. They had weaker economic news. We saw government bond yields fall to their lowest levels in around 2.5 months, and that cast a pall over stocks. So we had the French market down by around 0.2%, German DAX down by around 0.5%. One thing worth pointing out is that the miners did well in London trade. So we saw gains in the order of around 2% for Rio Tinto, Anglo American and BHP, for example. So it'll be interesting to see what extent local mining stocks continue to benefit from that improved outlook when it comes to the COVID restrictions in China.
Are you going to watch that Harry and Meghan special, Tom? I know you're a fan of them.
I can't get enough of the young royals, Pete. It's, I've got a scrapbook at home, and I'll be leafing through that as I watch the Netflix series, yes.
See you, Tom.